Hi, everybody. Chris Engelbert with Engelbert Financial Advisors in Allentown, Pennsylvania. And it is July, and you can see by my presentation, we hope everybody had a great July 4th, grilling outdoors, going to the beach, the mountains, whatever you were doing on July 4th. So we're bringing you our first of the month update. As always, you can download my app and see this slide deck by texting Chris E to 36260. That's how you download my app. This slide deck is already on my app. So let's talk about what's on everybody's minds. The stock market is going up like a rocket. Now, why do I say that? It's because the S&P 500 has had the fastest recovery from a 20% drawdown ever in stock market history. Now, if you remember back in March and April during the whole tantrum with regards to what's happening out there with the president talking about tariffs, etc., the market peeled off a quick 21% in about 6-7 weeks. We then had Liberation Day, where the market literally went up 10% in one day. I've never seen that. And then from there on through the beginning of July, we've seen almost a 30% recovery after this 20% decline. So some of the other things that are happening, though, during this recovery give us a little bit more encouragement as far as some of the other styles of investment as far as stocks go out there. The Russell 2000, which has not made a new high, we are finally seeing mid-cap stocks, mid and small cap stocks, actually outperforming large cap stocks since the bottom in April. We've seen the Russell get above the 200-day moving average. And if you watch some of my other videos, you know that we like dividend stocks and we like small mid-cap stocks. So the good news is small mid-cap stocks are finally participating, and we're seeing this rally really broaden out. Now, one of the things that we really haven't talked about is the fact that international equities have really lit off this year, and they are one of the best performing asset classes out there. And the U.S. stock market is actually trailing international equities. We've been adding international equities to our portfolios. We think you have to continue to do so. I can get into a whole conversation about the U.S. dollar. But again, the point that we're trying to make is that if you did not look at your statement, monthly statement since February, and then you opened up your monthly statement on June 30th, you would have thought that nothing happened in the stock market. And that is not true. Again, we've had a historic recovery after a 20% decline. Let's talk about interest rates a little bit. The 10-year is still in a trading range. We've seen a lot of chatter about whether or not Powell's going to lower interest rates. Many of the fixed income managers that we've been surveying over the last 6 weeks have said that they do not see interest rates, especially on the short end, declining anytime soon. We've said it before in our previous videos that the Fed is deathly scared of reigniting inflation. If they'd lower interest rates, they think that is what's going to happen. Now, the question is whether or not the U.S. economy is going to go into a recession in the back half of 2025 and interest rates have to be lowered or not. We don't see any possibility. The Fed funds futures forecast, say that 3 times really fast, is right now giving almost a 0% chance of any kind of lowering of interest rates in July. There's about a 20% chance in September, and then there's about a 40 to 50% chance in December. But as of right now, the 10-year Treasury and short-term interest rates stay in a trading range for the time being. So again, you're getting some pretty good deals on short-term bank CDs. We've been buying them as of this video airing right around 4.3%. And then also we've been buying mortgage-backed ETFs. We think that those are a value too. And again, fixed income is literally giving you a 4.5 to 5% return without the volatility that we've seen in the stock market. So I want to sum it up again. We've had the fastest recovery in stock market history after a 20% decline. Our risk indicators are elevated again, and our valuation levels are extremely elevated. So right now, we are going to be entering earnings for the second quarter beginning in about a week and a half with the big banks reporting first. And we've got to really thread the needle as far as earnings go, as far as a recession goes, as far as employment goes, to make sure that we all of a sudden don't have a Wile E. Coyote moment in the stock market where everybody's looking at these extended valuations and we see earnings begin to deteriorate. Right now, it doesn't look like earnings are deteriorating, but we have yet to experience the effect of the elevated tariffs. And July is going to be kind of, and this is a term that many investment professionals use, a wonky month, because we're not really seeing the effects of the tariffs take place until August. Whether or not some of these countries turn around and do trade deals with the United States is still to be seen. But again, we have elevated valuation levels, especially in large cap growth and the tech sector. Again, we've been trimming those positions because we believe that they are fully valued at this point in time. You can see the Russell 2000 join the rally party. Finally, we can make the case that small mid-cap stocks and dividend stocks tend to be a better place for returns the back half of the year. Again, all depending upon whether or not we go into a recession. Now, if you see interest rates start to break down sharply, if you see the 10-year Treasury get under 4%, that could be a warning sign that we are going into a recession, possibly in the fourth quarter of 2025. But for right now, everything seems good. The hot dogs are great. The hamburgers were even better. The sun is shining. It's hot, and it's a good time to go to the pool. So we will be back next month in August with our monthly update. And again, by downloading my app, you can get the slide presentation and also contact us whenever you need to review your portfolio or if you'd just like to talk to us. That's the July update, everybody. Thanks much for watching. We'll be back next month.